So good to have you join us today on this edition of Business Daily. I'm Lee Ji-eun in Seoul. Let's get started by taking a look at today's highlights. Ahead of President Park Geun-hye's visit to Africa this week, we look at the region's growing construction market that holds great promise for Korean builders. The 19th National Assembly closed its term, leaving a number of key bills aimed at reforming the country's economy untouched. We take a look at what tasks lie ahead for the next National Assembly as it kicks off on Monday. But first, Korea's state-run think tank has cut the country's growth outlook for this year to the 2% range, joining a number of other global and local financial institutions. With that, the question is now on whether the government will lower its growth target as well. Our Hwang Jae starts us off.
Korea Development Institute, or KDI, expects the domestic economy to expand 2.6% this year, further stoking concerns that the country is falling into a low-growth trap. The state think tank's latest forecast is in line with other major institutions like the OECD and the IMF that both expect Asia's fourth-largest economy to grow 2.7%. The Bank of Korea projects 2.8% expansion, while some private financial institutions forecast growth will be even lower. KDI cites slowing exports prompted by slumbering global demand and a constraint in spending due to longer life expectancies as reasons for the downgrade. It also pointed to the corporate restructuring push as a major uncertainty that could further slow the economy.
From now on, the restructuring of ailing companies is a critical issue, so all macroeconomic policies should directly and indirectly support the overhaul of the firms.
The director added that related parties will have to share the burden of losses incurred in the process of restructuring, and fiscal support should be drawn up as a last resort. The institute also called for a more expansionary monetary policy as it would help buffer possible shocks stemming from the shakeup. And facing more uncertainty of massive job losses as the restructuring drive gains momentum, speculation is mounting that the government might also lower its growth forecast to the 2% range next month when it releases its economic policy for the second half of the year. Still, some experts say the government will want to hold on to its 3.1% growth projection as it acts more like a target for the economy. Hwang Jae, Business Daily.
Meanwhile, government officials and ruling Centre Party lawmakers held a special consultative meeting on this Tuesday on how to minimize the fallout from its corporate restructuring drive. High on the list was creating a safety net for workers who stand to lose their jobs. They agreed to designate Korea's cash-strapped shipbuilding industry as a sector for special employment support at the latest by the end of next month. That would open it up to administrative and financial assistance, including job retention subsidies and extensions on unemployment benefits. The Vice Minister of Labor plans to take part in mediating conflicts with labor unions for quick resolution on problems like overdue wages. Officials and lawmakers are also considering postponing the collection of insurance fees and overdue taxes, not just from shipyards, but also from their subcontractors. And latest on those negotiations between troubled Hyundai Merchant Marine and the ship owners of its charter fleet. Despite the government having extended its initial deadline, which was last Friday, and allowing the talks over cutting charter rates continue, the prospects for striking a deal are still not that bright. In the scenario that Korea's second largest shipper fails to do so, it is likely to face court receivership. This would in turn block it from joining a global shipping alliance and exclude it from cost-lowering benefits, pushing up the odds of liquidation. Hyundai Merchant Marine needs to cut charter rates by about 30%, as demanded by creditors led by state-run Korea Development Bank. Africa is under construction. Data from Deloitte shows the continent as a whole spent more than $130 billion last year in transportation-related building alone. And East African countries, where President Park Geun-hye heads on Wednesday, is no exception. Our Eunice Kim takes a closer look.
Iconic among East Africa's several building projects is Kenya's ambitious $13.8 billion plan to lay miles of train tracks to eventually link up the region's major cities.
To regional economic transformation is impeded by the high cost of transporting cargo.
Launched in 2013, the initial leg of the project, won by a Chinese state-owned company, is set to be nearly done, connecting the capital Nairobi to Mombasa, Kenya's second largest city, to dramatically cut down travel time from 12 hours to 4. Against the trends of a slumbering global economy, East Africa is on the move. According to Korea's International Contractors Association, the region has maintained a growth level above 5%, and its construction market is valued at an annual $22 billion. The group adds Korea's order volume out of East Africa has surged since 2010, crossing $1.8 billion as governments keep up with their booming populations.
The region has great potential for growth as the government has a strong commitment for developing its industry.
According to Korea's trade ministry, most of the companies accompanying President Park Geun-hye on her tour will be small and medium-sized enterprises as they seek to seal new projects in construction as well as untapped sectors. Among them is this company that has patented technology for discarding used syringes. It has already procured an order from the Ethiopian government.
We've received an order for 1,000 units, but we're hoping to sign an MOU for an additional 8,000 units, with a trust built up during this upcoming trip.
Many countries do hold caveats of instability in politics, security, and regulations. Accordingly, experts advise companies to take a long-term view on cooperative development over medium-term economic gain. Eunice Kim, Business Daily.
During its four-year term, Korea's 19th National Assembly placed a lot of focus on economic reforms. But as it wrapped up its final regular session last week, it left much of the controversial economy-related bills on the table for the incoming parliament to take care of. Take a look.
The 19th National Assembly kicked off back in 2012, and there were high hopes it would deliver positive changes through key economic reforms. But 4 years later, it faces criticism of being confrontational and unproductive as lawmakers end their terms. It voted on less than 46% of the bills submitted, which is the lowest in Korea's parliamentary history. And during its last plenary session on Thursday, it saw more than 10,000 bills automatically scrapped. Some of those bills were related to labor reforms and economic revitalization. And although the government and the ruling party are determined to resubmit them under the new assembly, opposition parties as well as labor unions remain strongly against the passage of the bills. So how can the 20th National Assembly tackle existing issues to ensure that the sluggish domestic economy moves forward over the next 4 years?
And to talk with us more about this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. So good to see you, Professor.
Happy to be here.
All right, so one of the key agendas of the 19th National Assembly was carrying out economic reforms. So in that regard, how did the 19th National Assembly do, and how about other areas related to the economy?
Okay, well, there was a lot of conflict, there was a lot of argument, but in the end, I think the 19th National Assembly was very disappointing. When we go and look at actual laws passed, I think there were very few really important economic legislation which passed. That is to say, there was some. For example, the Korea-China FTA was passed under this National Assembly. The government employee pension plan reform was passed under this National Assembly, and the special law on improving corporate vitality, the so-called one-shot law, which makes M&A easier, that was also passed. And on the last day, when they passed 130 laws in one day, they also passed some relatively uncontroversial but important laws, like extending unemployment insurance and extending the business structural reform law. But a lot of things that they were talking about, like the like labor reforms, like economic democratization, things really didn't get that much moved. There was that much movement.
Now, going into detail with the ones that you just mentioned, can you tell us more about some of the key bills that President Park Geun-hye administration had been pushing for that's related to the economy?
Okay, well, the President Park has been really pushing the 5 labor reform laws: the Labor Standard Act, the Temporary Workers Act, the Short-Term Workers Act, the Employment Insurance Act, and the Industrial Insurance Act, which were designed to make the labor market more flexible. That did not get passed. The basic law on service industry development, President Park has been emphasizing service as a means of employment and means of growth for the future. That law did not get passed. The special law on regulation-free zone, which was supposed to act as a vital center for regional growth, that also didn't get passed.
Now, at this point, we want to know, why was there so much dispute over these labor reform bills?
Okay, well, there's actually a lot in these labor reform bills that I think all parties like. There was extension of unemployment insurance. There were some more definite definitions on what the overtime is going to be, what labor hours are going to be. But there were really some very controversial content. For example, are we going to make layoffs easier, especially for workers who are underperforming? Are we going to expand the range of industries where part-time work, dispatch workers can work? Are we going to have a peak wage system where the older workers will get paid less according to their productivity? Service industry development law, it seems more or less uncontroversial, except that this could be used to privatize a lot of medical services, which a lot of people do not want. And then regulation-free zone, well, everybody agrees that there's too much regulations and there should be some regional development which can be served by this law, but nobody can agree on which laws and regulations should be kept and which should be allowed to change under the regional directives. So all those problems make these laws very controversial.
And the new National Assembly is scheduled to start on May 30th. So in your opinion, what economic issues do you think will be at the forefront?
Okay, well, according to what the controversies were in the 19th National Assembly, as well as some of the promises made by the political parties, I think there's going to be a lot more populist argument, which isn't necessarily bad.
All right.
But still, there's going to be a lot more attempts to appeal to, say, the middle class. There's also going to be a lot on income disparity. There's going to be a lot on consumer protection, protection for incomes of the middle class, labor protection, and assistances to failing businesses, whether it be small and medium-sized businesses or large businesses. I think that's where the political focus is going to be.
So with the 20th National Assembly getting ready to deal with those issues, what kind of approach should lawmakers take on them?
Okay, well, we talked a bit about what the political emphasis is going to be, but I think the economic emphasis should be on, for the short term, how to spark consumption. Every problem that Korea has in the short term, I think, is due to low consumption. So how do we spark that? And then for the longer term, how to spark higher productivity and growth, how to reduce volatility, because the international economic environment is very volatile right now, and how to deal with structural reforms like the shipbuilding and the maritime transportation industries, but also industries like steel or financial services, which needs to really constantly undergo some kind of restructuring.
Now, as we mentioned earlier, the government and the ruling party are expected to resubmit those bills that failed to pass the 19th National Assembly. So what lies ahead for these bills, and do you think they have a better chance of getting these passed in the new assembly?
Okay, well, I should emphasize that unlike a lot of other countries, when National Assembly changes in Korea, all the old laws which were under consideration in the old National Assembly get canceled. And I think for at least if you compare it to, say, countries like United States, where they have continuation, this involves a lot of inefficiency. And the logic behind this cancellation is that, well, the new National Assembly should not be beholden to the old National Assembly, but because a lot of these very important laws do not get passed and they have to start again completely from scratch, I think it does involve a lot of delays, a lot of unnecessarily inefficiencies. And this has gotten worse in the last couple of National Assemblies, 18th and 19th, because they spent so much time politically infighting that a lot of times they don't have enough time to really consider some of these bills. Also, a lot of National Assemblymen are proposing bills which are really somewhat minor in nature and sometimes they do not have quality control. Now, to try to get some of these bills continued to the new National Assembly, but that would require not only changes in current law, but changes in the Constitution.
So you think these bills are not going to have a better chance of getting passed in the new Assembly?
The political situation here is now that the ruling party is actually one of the minority parties, so they're going to have to compromise a lot. And that probably means that they'll have to not only resubmit the bill, but reformulate it to some extent. And that's going to take additional time.
All right, let's hope to see better things coming out of this new 20th National Assembly. Thank you so much for coming in today, Professor.
Thank you.
And that brings us to the end, but we'll be back tomorrow at the same time, same place for your Business Daily. Thanks for watching and see you soon.